Hey everybody, welcome back to the channel. Today I'm talking about Rob Vinall. He just released his first half letter for 2022, and that's what I'm going to talk on today. Now, this letter typically comes out earlier than what it did. Unfortunately, in his letter, he talked about being in the hospital for 10 days here recently, and he didn't want to put the letter out until he knew his prognosis on if he was going to recover or not, or what his future looked like. But thank goodness he's going to be okay. So that is awesome news. All right. So I went through the whole letter. It's a pretty lengthy letter overall. So I'm just going to summarize some of the main points that I got, and I'm bringing that to you guys. So first off, he talks about or shows what his portfolio returns have been since inception of his portfolio. And he started his portfolio back in 2008. Keep in mind, he manages a couple $100 million worth of money for people. So he has a decent sized portfolio, no doubt about it. And he really timed it perfectly because obviously financial crisis in 2007, 2008, but going into 2009 is when things really started rebounding. So he really, again, timed it pretty well. So in 2018, it was only 3 months worth. He was down 13%. Then it was 31% up the year after that, and so on throughout the years. And so since inception, he is up 500% compared to the DAX. And I believe the DAX is a European fund. So that's what he's kind of comparing against. So he's up 386% more than what the DAX is. Now, from a compounded annual growth rate after fees, it's about 14%. So definitely better than the market overall. But if you see this year, the first half of the year, he is down 40%. So he is down pretty heavily on a couple of stocks, which we'll kind of talk about a little bit in this video. So that's kind of where he's been, but know that his annual returns have been better than the market. And keep in mind too, if you know Monish Pabrai came out and mentioned Rob Vinall a couple months ago as being an investor he would follow and highly respects. In fact, Monish Pabrai, one of the reasons we got into Prosy, it's because of Rob Vinall by one of his letters that he read of his. So definitely high respect there as well. So I'm not going to read verbatim here. I'm just going to touch base on a few things. And so he does talk about changes within his, management, bringing on, new people, new managers. Also keep in mind that he had some organizational changes as far as changing the name of his fund. Now it's just called RV Capital. Before it was RV Capital, like GmbH or something like that. So if you're looking for it, like on Dataroma or Ticker Terminal, it's just RV Capital. So just keep that in mind. Talks about more organizational changes here, which I'm not going to touch base on. So we'll just kind of go on a little bit from here. First off, he says, how am I dealing, with the drawdown overall? And he just goes on and says he's actually doing fine, not as well as he would like to be, but he's doing okay. He's really taking a page out of Warren Buffett's book that, as price declines, it can offer opportunities if you're buying the right companies, buying companies that you understand, have really solid moats, have a margin of safety, have good management. That's what he's looking for. He really likes companies in this particular case when the market falls that are buying back shares. He thinks that creates immediate value creation, which a couple of his stocks that he owns are doing that. So Credit Acceptance is one. Another one is Prosy. So he likes companies when they're buying back shares when they're at depressed prices overall. So we'll go on here. Here's another section. He says, are we overexposed to long duration, cash flows? And he says some interesting stuff here. So he talks about a couple of things. He talks about jam tomorrow and not enough jam today. And I thought this was kind of a funny analogy. And what he's saying is, if you're buying companies that have really, really good cash flows now, bring a lot of money now, that means you're getting your jam today. If you're buying companies that are not going to produce high cash flows into the future, that is jam tomorrow. And so a lot of people have, said, are you buying companies that, are not going to have profits or free cash flow into the future? Is that going to cause problems? Is that what hurt your portfolio? And he said, well, you want to have a balance between the two. So, he looks at, companies say like, Credit Acceptance and Meta that have tons of free cash flow, where he's talked about other companies maybe like Wix or Carvana that will have more free cash flow in the future. And he just thinks that there should be a balance there. Now, he did say a lot of the stocks he got into over the last, year or 18 months, say like, Carvana, Salesforce, have been more, jammed tomorrow than jammed today. But he does like where his portfolio is, overall. He does recommend a book in here that I'll have to check out. He talks about, it's called Capital Allocation, the Financials of a New England Textile Mill, 1955 to 1985. And it's McDonough that describes some of Warren Buffett's earlier investments at Berkshire Hathaway. And he said it's a phenomenal book. So it's definitely one that I'm going to go check out. And that's kind of where we got the jam today, jam tomorrow. But essentially, it looks at strong cash producing assets. That's what Buffett looks at, just in, companies in general, but particularly when stocks, fall overall. And he says truly great companies grow by investing their cash flow back, into the company. Like Wix, for example, for the last 18 months, they've been putting a ton of money back into the company. And he believes that is going to create more future free cash flow going out, into the future overall. Now, he goes on and talks about, the impact of inflation. He says some interesting things, in his letter here about it. He says, he wants to avoid speculating how high inflation is going to go or how long it's going to last. And simply, he says, no one can predict it. All these financial experts can come out and say, oh, I think it's going to end, this year or next year, whatever. And he just says, it's really actually not important at all. He says, again, he tries to look at, Warren Buffett and what Warren Buffett says, what he does. And he doesn't really look at the current market situation when he is buying, stocks. He tries to ignore that and looks at a company specifically. Again, those different pillars, make sure he understands it. Great moat, margin of safety, great management, and buys it nonetheless, right? And yeah, he typically does buy more stocks when they dip in value because they've gone down to the margin of safety that he looks at or that he wants to buy the company at. But he doesn't really look at current market conditions to make certain investments overall. Now, he does talk about interesting, and I do kind of disagree with him on this, that, inflation right now, he says, is mainly due because of, less to do with money printing, but everything to do with shortages of all kinds of goods and services resulting from, the whole pandemic. And again, I have to disagree with him. I think it's two things. I think that is one thing, but I do think money printing is another piece. When 80% of the money is in its entirety in the United States have been printed from 2020 to 2021, you get a lot more money coming into the market. People are going to spend that money and they're going to spend it on goods, and that's going to reduce goods and then create demand. So I think it is those two factors that are creating inflation. So I do disagree with him on that, but I get what he's saying, overall. And he goes on again, he doesn't lose sleep over inflation. And he actually goes on and he talks about, companies in his portfolio that actually will do well, he thinks, against inflation. And the one he specifically talks about is Wix. He thinks, Wix has an incredible moat. Wix is a company that lets you create your own website. It's really tailored to like small businesses. Yeah, Shopify is the biggest one in the space, but Wix certainly, is a player in that space. It's around a $5 billion market cap. And he said, Wix is a perfect example in this type of market that's going to do well because it just raised prices by 20%. And it really didn't see much churn of people leaving the business because, they tend to be cheaper than, a lot of the competitors, but then also, the switching costs of trying to move your website to one or the other, takes a lot of time, takes money, takes energy. And, Wix should do really well. That's what he says. So that's kind of interesting overall. He goes on, talks about, are we overexposed on tech. And I will say, and he mentioned it in an email a couple weeks ago, that he wanted to really take a step back on his portfolio and really reevaluate all his companies to figure out, did he make bad decisions? Being down 40% in the market, or the market's been down 20%, did he make bad choices? Is his portfolio okay? And that's kind of where this question is coming from. Are they overexposed in tech? Because he's been getting in more in tech, recently. And there's a couple of things he said that's interesting. So first off, he talks about, the word tech or tech company, he thinks is changing. He says, Amazon's considered a tech company, but that's really a retail company. Netflix is considered a tech company. Well, that's really a media company. So he believes that people should be changing their thought process on what really a tech company is overall. But he does think he does have, plenty of balance in his portfolio that is not tech related. Credit Acceptance, for example, Ryman Healthcare, AdLife, TFF, Granke recently started getting into Trupanion. So all those are not considered tech at all. So about half his portfolio is not. So he's saying, yes, I am in tech and I've been getting into tech recently more than normal, perhaps, but it's okay. He still has plenty of other stocks that can, balance that out overall. So that I thought that was pretty interesting. And he also says that, with inflation, you want to buy capital light companies, and that's coming from Buffett as well, and buying companies that have pricing power. We just talked about Wix raising their prices 20%, but companies say like a Coca-Cola, I mean, that they can raise price by 5% and no one's going to blink an eye. Starbucks, that's another great example of a company that's can raise prices and people are going to pay it. Those are the type of companies you want to own in this type of market, and capital light as well. Companies that don't have to go out and spend tons of capex to keep their business going overall, and plenty of cash as well. So really a really solid balance sheet is important, during these type of times overall. So very interesting. He also goes on and talks about that, tech companies really been hurt this year. And he believes the reason for that is that the pandemic really pulled forward a lot of that demand for these companies. And so their revenues just spiked. I mean, you can even look at Google, at Meta. 2021, the revenues just went bonkers, right? And so when you're looking year over year, those comps are not really great. And it may take, a year or 2 years to kind of normalize for these tech companies. But another thing he said that was really, really interesting is that he said if investors are really scared about inflation and it's keeping up at night, he thinks tech companies are a really, really good place to park your money when inflation is really high. He thinks they can actually do really well long term, and especially when inflation starts coming down. You could really see a lot of, spike potentially in these companies and stock price because their, revenues will go up. So it kind of interesting overall. I would not have thought tech would be a great place during inflation, but he doesn't think that. He thinks it's a good place to park it if you want to. Now he goes on and talks about the war in Ukraine, and he says some interesting things in here. And the one thing that stood out to me, if I can find it down here, well, I'm not seeing it off the top of my head, but basically what he says is that he believes there's two superpowers now. It's China and the U.S. He said 100 years ago, there's obviously countries, in Europe that were superpowers as well. But he says it's really just China and U.S. There's not a close third in the world. And so you have these two huge superpowers at this point that are leading the way. And China, specifically, could come out really even farther ahead because of this war that's going on in Ukraine, because NATO, and the United States as part of that, is not going to do deals with Russia, really pull back on that. Well, Russia's willing to do, deals and buy things from Russia. And so that is going to, he thinks, could propel, China going forward. And they're already catching up to the U.S. from a GDP perspective, but he thinks this could really catapult them even faster and farther into the future. So this is a huge win actually for China. He thinks it's a bigger win for them, but he does not condone the war that's going on. He reiterates many times that he is very sad about what's happening. He lives in Europe, and so he's actually fairly close to the situation, and he doesn't like seeing what's going on there. But he does think actually China is probably going to come out stronger because of what's going on. And, speaking of China, he talks about, is China investable? He is invested in a couple of stocks, that are either in China or have a substantial stake in a Chinese company. So you're talking Alibaba, for example, in China, and then he owns Prosy. Prosy is his second largest position. Prosy owns a huge stake, almost a third of Tencent stake. And the idea with Prosy is that they're the value of the assets on their book is way greater than what their market cap is, and it creates a great synergy there from a investor standpoint. And he really took time to think about China and thinks it's a great place to invest because it's right now the second largest economy, but it's going to be the number one in the future. They're growing really fast. He believes that there is, capitalism within, China, the whole socialistic communist type, theory around China doesn't really hold true as much as it has been, in the past. Yes, CCP is still involved in a lot of things, but they're not as communist as what people think they are. But one thing he said that really stood out was he said one of the things that he did not like was Nancy Pelosi visiting Taiwan, who was in Congress here in America. And he said he thinks it could, provoke, some issues between China and the U.S. by visiting Taiwan. So he thinks it was a really, bad idea for Pelosi to go there. And he said it could, he doesn't think it's going to happen, but it could trigger China to, maybe respond. And then U.S. responds more. And then you get into like who's bigger, badder, and then the whole world suffers. In fact, this is what he says about Pelosi visiting. He says, this strikes me as an act of diplomatic vandalism. So pretty strong words there about Pelosi, visiting overall. So interesting to see someone, outside the United States actually talk about, that and kind of seeing where it's going to go. But he hopes that the expectation is that both countries have the cooler heads in the end, and we'll kind of see what happens there. So lastly, he goes and talks about, the companies that how are they doing in his portfolio. And he talked about 6 companies. So the company that, he talks about, or the 6 companies he talks about are Credit Acceptance, Prosy, Meta, Salesforce, AdLife, and Carvana. Now, I'm not going to go through every single one of these. I'm just going to touch base on 2 of them. And the first one I want to talk about is Prosy. So Prosy, I already talked about a little bit. Company that owns Tencent stake, about 29% right now. It used to be like 33%. And they're planning to buy back a ton of shares. They're selling the stake, buying back shares. And that's what we want as Prosy investors. At least that's something that I've wanted, to be able that Prosy, which is owned by Naspers, to be able to take advantage of that huge 10-cent stake that they have, which is worth billions and billions and billions of dollars. And they bought back 10% of their shares last year, about 13% probably this year, and potentially more going into the future. He also talks about, he didn't necessarily make a mistake, but he did talk about when he first analyzed Tencent, he thought, they would grow at 19% on the top line through 2025. So 19% per year. But this year it's going to slow down to probably nothing, probably flat this year because of the Chinese economy. But he thinks 2023 is going to normalize and things are really going to take off. So he thinks a strong rebound, in a year. So that'll be interesting to see. So those are kind of the main things he talks about. About Prosy. And then last, I just want to talk about Carvana. So that's the last one he talks about in here. And this is a stock that he's down considerably. And he started buying around $150. Today it's trading around $40. Just 2 weeks ago, it was at $20 a share. At one point, the stock was up around $350. And so, he talks a lot about Carvana because that's his recent, position, and it's fallen down so much. And he says, he, still likes the position, but they're definitely leveraged more than when he first started buying in. So they took on $3 billion of debt. They bought a company called Odessa, so they get access to their different sites. They have 56 sites. They'll put reconditioning centers on there. And when they did that, unfortunately, it was the worst timing ever. So it was back in March timeframe when the market started to fall. And all of a sudden, the financing they had in place fell through, and they had to get these terrible interest rates, around 10% for that deal to go through, which is just awful. But overall, he thinks that they have a great future. He thinks that they have an incredible market opportunity. They only sold about 1% of total used cars last year online, or for the total used car market. And he thinks that's going to grow substantially going into the future. So they sold 400,000 cars last year. They sold like almost 120,000 last quarter. And he, with their current situation, the building out those Odessa factories or sites, they can get to about 3 million per year of delivering cars, and they'll be able to reach more people too. He also goes on and talks about Ernie Garcia. There's a lot of negativity around this guy. You can go do research on YouTube or whatever. His dad, who owns Drive Times, got into some legal trouble in the past. His son is the one who runs Carvana. And so there's just a lot of negativity around that. And that's the thing I get questioned the most about Carvana, because I've had videos on my channel, a couple of videos about Carvana, people saying, have you seen all the other YouTube videos out there? And it's like, yeah, I've seen a lot of those. But everybody has different perspectives and opinions. So we'll just kind of see how that falls out in the end. So that's pretty much his letter overall. I think it's really terrific. If you want to get access to this, you can go to his website, his RV Capital website, and you can request access to that website and get access to his letters. Sometimes it can take a while for them to respond. I've heard other people not getting access to that. So if you're interested, you can reach out and see if you can get access to his site and his letters. I think they're very, very good. And he definitely has some other YouTube videos out there, not very many, but he's got some really solid ones out there as well. If you can take a look at those if you have time. And thank you so much for watching. I mean, I would love to hear from you guys. What do you think about Rob Vinall? What do you think of his portfolio, his returns this year? Do you think he is in a good position with the stocks that he has in his portfolio? We talked about, Meta, Salesforce, AdLife, Carvana. He owns Alibaba, Prosy. He owns a little bit of Trupanion as well. So definitely interesting stocks there overall. So I'd love to hear from you guys in the comment section. Thanks for watching. I'll catch you on the other side. Take care and God bless.